Let me show you a simple plan for your money. It is a calm and clear path. It can change how you see your finances every month. You do not need to be an expert. You do not need a lot of money to start. This plan works for everyone. It is a rule that gives every dollar a purpose. It helps you build a life you love, free from money stress. This is not about getting rich overnight. It is about building real, lasting wealth slowly and steadily. The plan is called the 25-50-15-10 rule. Think of your income as a whole pie. We are going to slice it into 4 pieces, and each slice has a job. 25% is for future growth. 50% covers your essentials today. 15% builds stability. 10% is for rewards and joy. This structure brings order, removes guesswork, and gives you control. It is about smart, automated habits so your money flows to the right places, freeing your mind for what matters. The first 25% is the most powerful. Growth. This is the money you put to work for you. Think of it like planting seeds that become strong trees over time. Those trees can provide for years. That is true wealth. It is not about your salary. It is about what you own. Before you pay anything else, pay your future self. Flip the script. Take 25% off the top and invest it. What do you buy? Assets. Things that can make you more money. For beginners, low-cost index funds are simple and diversified. You own a slice of the market, not just one company. It is a steadier, long-term approach. Other growth assets, real estate or REITs, high-income skills like coding or digital marketing, even a small side business. Use your 25% to acquire what grows or produces income down the road. Make it non-negotiable and automated so it happens every month. Let me tell you a story to show the magic of starting early. Imagine 2 friends, Billy and Phil. Billy starts at 20, investing $200 a month. He stays consistent. Phil waits until 30, then invests $300 a month. Both invest until 60. Now the numbers, Phil puts in $108,000, Billy $96,000. But compounding changes everything. Assuming 10% annually, Phil ends near $678K. Billy about $264 million. Billy invested less, yet finished with almost $600,000 more because he started earlier. Start now, even small, $50 or $100 a month beats waiting. Time is your most valuable asset. Start investing your 25% now. Now, how to actually invest step by step. Step 1, open the right account. Use tax-advantaged accounts if available to you. They reduce taxes so your money grows faster. In the U.S., Roth IRA, funded with after-tax money, growth and retirement withdrawals are tax-free. 400 nuts, 1K. Pre-tax contributions, potential employer match, free money. In the UK, a stocks and shares ISA, profits are tax-free. Search for your country's options to maximize benefits. Then pick low-cost, broad index funds, simple, diversified, and low-fee. You can find them at major brokerages. Final step, automate it. Set transfers every payday. Automation makes investing effortless and consistent, simple, safe, repeatable. Next, 15% for stability, your emergency fund. It catches you when life throws curveballs, job loss, car trouble, unexpected medical bills. This fund turns crisis into inconvenience. Aim for 3 to 6 months of essential expenses. Calculate your monthly baseline, then multiply. A strong 5-month buffer is a solid target. Store it right, easy to access, 0 risk, and it should still earn some interest. Use a high-yield savings account, insured and paying higher rates than checking. A quick story from my early years taught me this the hard way. I took a loan for a car, the engine blew, no savings. I borrowed more, stress piled up, and I lost a year of progress. With a stability fund, it would have been a calm, cash paid fix. Most people do not have a money problem, they have a stability problem. This 15% is the foundation of your financial house. Protect your progress, then keep building. Now the largest slice, 50% for essentials. Keep housing, groceries, utilities, transportation, and insurance at or below half your after-tax income. Beware lifestyle creep. Spending expands with income until you feel paycheck to paycheck again. Lock in the 50% cap. It forces intentional choices. Focus on the big wins first, housing and transportation. Negotiate rent, share space, or choose a more affordable area. Buy reliable used, avoid leases, or use public transit if feasible. Be clear on essentials versus luxuries. Cancel unused subscriptions and cook more at home to free up cash. This is not deprivation. It is conscious spending on what matters. Keep essentials lean so growth, stability, and joy can thrive. A simpler present can build a stronger future. The final 10% is for rewards, your guilt-free, fun money. Use it for experiences, meals out, a weekend trip, hobbies, concerts. It keeps you motivated. Create a separate account and automate 10% every payday. Spend from it without guilt. Your bills and investments are handled. 3 quick tips to stay on track. 1, start with what you can. Automate even 5%, then increase over time. 2, when income rises, pre-allocate more to growth before lifestyle expands. 3, use simple rules like the 7-day rule for wants. Automation beats willpower. We have covered the 25 to 50, 15, 10 rule. Now take one small step this week. Open a high-yield savings account, cancel one subscription, or increase your retirement contribution by 1%. The best time is now. Build your system. Let it run quietly in the background. If this helped, subscribe for more calm, clear financial advice. Join us and manage your money like the top 1%, wisely, steadily, and with peace of mind.